Greetings, Forex traders. I'm here with a trading video. It's May 27th, Sunday. We're going to be talking about another asset class, bonds. I don't think every Forex trader should be an expert on bond markets, and by no means am I, but I am suggesting that they can be a valuable tool and guidepost for speculative trends and the search for return. Looking at the high yield corporate bond index, we have seen a move to the downside that has led the move to the downside in U.S. equities. In the search for signs that fundamental trends may be shifting, you have to look a little bit deeper. So what this chart does is it compares the spreads between the low rated bonds, the junk bonds, with the higher grade, investment grade bonds. The headline takeaway from this is that the spreads are very, very tight. This is a bit unusual for two reasons. The first being that we've seen an increase in yield in U.S. Treasury bonds. And the second, that the U.S. Federal Reserve scheme of quantitative tightening indicates that as the balance sheet unwinds from the period of quantitative easing, this will shift the burden of debt back to private entities. Looking at the lows on this chart reminds me of a notable quote from Oaktree Capital's Howard Marks, that trees cannot grow to the sky and that few things go to zero, junk bond premiums included. It is possible to compare the store of potential energy in this system to the Vega selling that occurred in the lead up to February's move in the VIX. However, I wouldn't expect an explosive departure from our lows. Remember that we would be comparing apples to oranges in this case, the credit cycle versus the equity cycle in the S&P 500. As for implications for Forex, a flight out of junk bonds and fixed income assets necessitates a flight into traditional safe haven assets, with the Japanese yen being an accessible candidate for liquidity. Other factors that might increase the bid for yen would be political risks, such as instability in emerging market countries, the trucking crisis in Brazil, developing situation in South Syria with forces, Iranian forces encroaching upon former ceasefire treaty conditions, and the situation with the United States and North Korea diplomatically. But with these in mind, the possibility of a geopolitical head fake with any of these, you should remember. And this is generally where something looks terrible at first, but then is quickly resolved in the opposite direction. An incident that I will always remember as a trader is on a Friday afternoon, a report coming out of Turkey, right as markets were closing, that rebel jets were threatening a plane that happened to be carrying President Erdogan. Now, I watched the market jump and react to this, but in the end, I was glad that I refused to alter my positions and trade the news, because over the weekend, it was reported that the coup failed and that status quo was quickly put back in place by the time the markets reopened on Monday. And the situation with the president and Erdogan was that he emerged stronger than ever. So you always must remember that in the short term, avoid your recency bias. In other words, just because the yen put a move on the dollar last week, it does not mean that there's a conviction and that a long-term trend must develop. I believe as a trader who's keeping macro elements in mind, you have to trade the developments and the fundamentals as they come, because it's simply too expensive to jump too far ahead of the market sentiment just because you have fundamental insights. Continuing our conversation about bonds, this brings us to Europe and the spike that we've seen in Italian bond yield. Now, you probably read that this is because of the political uncertainty from the new coalition, and I talked about this point in my previous video. Now, the main sticking point is the who will be appointed for Italy's Minister of Finance, the economic minister position. Now, the next coalition government is trying to position itself with regard to Euro-skepticism or Euro cooperation. And the most recent news that has just come out in the past few hours is that Italy's president has in fact blocked the appointment of this particular cabinet position. So this is going to really put the politics in Italy on hold for a while, because you have essentially a developing constitutional crisis if neither side is able to win a concession. What we've seen in the very short term from the euro, that has in fact had a gap to the upside upon Monday morning's opening in the Asian markets. I don't think that this move is an indication that things will be smooth sailing for the euro from here on out, nor do I think that that the euro is in dire straits and that it's somehow outlived its purpose. The way I see the euro from a broader picture philosophically is that the idea has contained within it all of the trappings of collectivism. You have strength in numbers, for example, shared risk, and the chance for a unified supranational management of policy, whereby the weaker, less consistent nations are aligned, somewhat corralled, but thus made more productive by the will of the stronger nations. However, the common currency, the euro, does face significant risks. The threat of contagion to the other debtor nations from instability in Italy. You have your old acronym PIGS, particularly Portugal and Spain. They have the potential for facing a vicious cycle whereby the economic uncertainty, fluctuations in government debt bonds, creates a feedback loop with political change, a coalition breakdown, creating a power vacuum for which populism can emerge. Of course, none of this directly affects markets in the short term. What it does do is tighten the margin of error for data releases and news events. What this does is it makes bearish developments more market moving, and the reaction to more optimistic signals and optimistic news muted and more restrained. What I will do this week is I'm going to look for technical patterns that indicate potential moves in euro yen to the downside, and I will update you guys on Twitter. So be sure to check out my Twitter page, which is FX with Q. Thank you, and good luck trading this week.